Alright, guys, I'm going to show you how I came to that trade, basically. It's on relative lower time frame, but I'm going to show you the top-down analysis I do for the dollar index, which I use in confluence with other pairs like the euro, pound, yen. So I always start from the 12-month time frame, which is the yearly time frame. Each candle is 1 year, as you can see, and I plot out all the gaps because they're just as important on this time frame as well. Okay, so you see a gap here. Price trades to it and then expands lower. This is a CB, right? So it's a bearish gap, trade to it, and then we make another low. So based on uh, price coming into an internal range liquidity and then seeking external range liquidity in the form of this low. Okay, fill up consolidation, price expands. You see this expansion, price comes down and then starts expanding up again, comes all the way to this inefficiency at this premium level. What do I mean by premium? From the entire range, it just about comes to equilibrium. Just about, or maybe directly to it. Pretty much about equilibrium. And then into this gap as well, inefficiency. Then it expands even lower again. So it expands here and it comes into it, internal range liquidity, takes out the low, external range liquidity, expands, and then it creates another gap here. So I'm just annotating the gaps that are more relevant. Okay. So we see a gap, price come into this premium gap over here, and then comes back to a discount gap over here. Makes another low, not taking out this wick, and then expands higher again. Okay, so you can imagine just seeing that candle there, expands higher, then you see this red one, and now we're here. Okay, so this candle here trades down into this. You can call it a breaker if you are just following the bodies, but it basically comes to this mitigation block, general order block area, and then starts expanding higher over here. So I've annotated the previous year's low and the previous year's high. So we have a gap here, but just like here, it may not trade into that gap over here in order to go higher, right? It's a breakaway gap and it's just going higher. Likewise here, so we came to a premium, came to a discount. Now we're back in a premium. We came to this CB twice in this order block, once and then again, and then now we're here. Okay, so to get more information, we'd have to go to a lower time frame. So I'm going to go to the 6 months now. Just to refine it, you see that piercing that came through on the yearly time frame. It came to the 6 month gap, and further into this area as well. Wicks are also considered inefficiencies. That's why the bodies are very important, where they open and close. So you can see it a bit clearer here. And price actually comes into a 6 month void, which is this area. As you can see, price does not close below the halfway. So that leads me to think that we can still move higher. Okay, we're not in a downtrend now, despite this big wake coming to the downside. I think we're going to move higher on the dollar index. So I'm going to go straight down to the monthly. Now just looking at this range over here, getting about all that. Now my higher time frame bias, really higher time frame bias is bullish, a bias that is above the monthly time frame. Okay, so each candle is a month. I know it's really seems really, I don't know, obvious, I guess, when you're just looking at on this time frame, but when you're down to the lower time frames, daily, even hourly, and you can imagine being on the minutes time frame and being quite confused where the bias is, because you got so many layers of price action and the price delivery algorithm, right? So there's so many layers. So that's why I like to do my analysis on this higher time frame first. So I'll show you my analysis here on the monthly. So one thing I note is this monthly wick, right? Wicks are imbalances, just like a gap. So gap, I always have the range and the midpoint. So I do not want to see bodies closing below the midpoint. This is quite nice, a gap, quite nice, a wick just about the midpoint, and then starts expanding up again. Okay, another bullish argument. And this is the wick that came, the final wick that came into the 6-month gap. And you see it's equal lows here. This is sell side liquidity. Okay, price comes up and it hits it one more time, and then boom, shoots up. We get price coming down one more time. And although it looks bearish because of the SIBI here, price trades into it, and then the next month it trades down, and the consequent month of April, big high close, right? So I'm going to go reverse just to show you. Okay, so we get a close above. All right, so what I'm looking now is for this gap here. Is it going to be an inversion fair value gap, as in it used to be resistance? Is it going to act as support? So now again, I don't want to see the body is closing too much below the midpoint. If it does close below the midpoint, I'm going to be extra careful. In this case, it does close a little bit below the midpoint. Okay, and we see the month that we're in now, June. Price opens, takes out the low, and then starts expanding higher. Okay, this is the dollar index. So we're going to go on the weekly. I posted my dollar index analysis and trade setup for price to possibly come into these areas. Price can always come down into this busy, take out its equal lows, but I think we can start possibly moving up and taking out first this high, and then there's a weekly opening gap in here and this entire void basically. Okay, so this is the weekly time frame. So you can see here on the weekly, we expand up, price comes down into this breaker, and then starts expanding up again. So price can come down into it again on a wider. This is just the next candle. So price can do it again and create actual structure. We have this trend line here. This previous month's high and the previous month's low. The low got taken out, by the way, as you can see. So now it's expanding higher. So where are you going to take out? There's no more premium arrays here. Okay. There's no gaps, order blocks, whatever. There's just this equal highs above here and the previous high. So that is the next premium array, the high. So that's what I'm targeting at the very least, I think. Or at the very least, come and play around with this trend line. Build some sentiment from traders who are trend line traders, support and resistance. So we're going to look at that, and they see a rejection. They're going to start going short. Try to take a short down to where, I don't know, whatever their strategy uses. Or they're breakout traders who are going to try and wait for a long. So price comes to it, it breaks out, they're in. Or they wait for a retracement and they're in. So they might be, sometimes they're right, sometimes they're wrong. But the thing is, just doing that, looking at these patterns, like, oh, it does this and that. They don't know where price is going because they don't have this knowledge about PD arrays and the price delivery continuum and etc., right? So they're just basing it off like these patterns. Oh, I see a line. Oh, it crossed the line. That's very myopic view of what price is actually doing, right? We know it's moving from liquidity inefficiencies like that. So by doing that, a lot of traders get in this area, right, with their stops, or they get in trades and have their stop losses above that high. So I see that we possibly come above, maybe make even more equal highs, or come above it a little bit and then retrace and then later expand, or just keep going, right? Either way, anyway, we're here. And if I go down to the daily, the moment I saw it was when there's this small gap here. I'm just going to highlight it. You can see it on my analysis on my trading view profile while it was here. So I saw this gap, and plus there's this gap here. Well, there's this gap. So price came down, closed below. So again, I was just watching, and then we had this big expansion up. Okay, so it came down to basically to this order block, which was rather large. So having a more deeper retracement is okay. Even if it came down to here, that would be fine by me. But it just came down to here and started expanding up, which is quite bullish to me, right? It's all about weighing how many PD arrays are matching up. That gives you more confluence to the direction that price is going to go, rather than just having like one random fair value gap. Maybe you have a fair value gap that is also an order block, that is a breaker on a higher time frame, that is a support and resistance level, that is these are just adding to the confluences. But you don't want to get mixed up with putting too many random. You don't want to put RSI and then Nichimoku and all this other retail stuff. Stick to the ICT stuff if you're going to use ICT stuff. Don't throw like moving averages on there, in my opinion, anyway. So we close the week here. Go back to the weekly, like that. So yeah, we'll see what happens next week, and I'll show you why I took that trade on the euro. So let's go to the euro. Go to the 12-month the euro, and we can see the same thing. They're respecting gaps, right? We see a gap here. Price comes into it, makes a low, internal liquidity, external liquidity. It comes a couple of times. Boom, 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 and then gives up. Now it's here. Okay. So let's go to the 6 months. Okay. So we also see a 6-month gap. So on a yearly, no gap, except for this breaker, which is here. Okay. See price come into it, and then you see it go down here. All right. So now I'm looking at all this. So I'm now looking at this premium and discount zones. Okay, there's this areas down here, this large wick that I think we can target, at least take out this low over here of this doji. Okay, because we came into that already. So that's one confluence there, that breaker, which was what this came into. Okay, now we're on monthly time frame. For some traders, they don't even go as far as the monthly time frame; they're just on the weekly. But we just saw the 6 month. Looks very clear, right? Even the 12 month coming into this breaker. You go to the monthly, there's all this choppiness and confusion, and most people, like I said, don't even come to this time frame. So they'll be like, "Oh, where are we even gonna go? I don't even know." So I've always been, not always, but recently, bullish on the dollar, so bearish on the euro. The only thing I've been considering for a bullish scenario is this gap here, right? So we traded into the gap, came up, and then came down low. So initially I was planning to, I did take a trade somewhere in there, but I wanted to use this gap as an inversion gap. But this is also one of my models that has quite a strong, usually a response, quite like a wick sandwich. It's kind of a doji wick in sandwich between two. So that sometimes I use that as something like an order block. But I'm still bearish, right? So price comes up and it comes down again. So let's go to the weekly. See what happened, right? So price came to this monthly order block, came into this bearish order block. Ignore the wicks. Just look at the bodies. What are the bodies respecting? Okay, came down lower. Disrespected this one. Why? Because it's on a higher time frame. It's doing a higher time frame thing. Okay, see this gap here. Why did price shoot right through it and we didn't continue higher? Because it's not continuing higher yet. We wanted to come into a discount. Okay, and we saw our analysis on the dollar. So price came into it, close, came down one more time. Take traders out, right? And then it left pretty fast on the week. At this point, yeah, people trying to get short, they're just getting wrecked all the way up. It takes it out one more time. Okay, look, comes into this gap. This is an R2F gap for wick here. I have a video on my profile as well. Took out the high, equal highs, and this high, and then started coming down, right? So at this point, I think a lot of traders were feeling bullish, but I had a feeling I was just waiting for that fake move to happen. So just to show you here, what do I have? 3-day. Okay. I like to go through the time frames and look for gaps, and also see which kind of PD arrays look kind of clear. So I have this tree body pattern, which is a breaker, right? Up, down, down. So at this point, okay, so now I'm at this candle. What am I waiting for? This big expansion down. I'm bearish on the euro, bullish on the dollar. What do I want to see? I want to see price come back into here and then expand down. Okay, so going into the daily, I'm waiting. Boom, big one. This is, yeah, okay, and Control Z. That's nice. Okay, let me just cancel this. That was the big one. Okay, just in the day we spiked up during news and then we shot down, right? So people may be fooled into thinking that's a bullish move, especially when the candle was full green, right? Because every wick was once an engulfing candle. You know, even the biggest wicks was once pure green. So if you saw this wick pure green, you're like, whoa, that's bullish, break a market structure. Yeah, you could be wrong. Okay, so okay, going back to the lower time frame. Sorry, it's taking a while, but I'm sure you want to know how I come to this conclusion. Before our gap here, I'm just going to delete this first because the trade happened. Actually, got somewhere in here, expecting this wick to be a sort of an imbalance, right? Price comes one more time, fake people out, and then it just drooped in. Traders are not having a clear direction, maybe just FOMOing, boom, 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 trying to catch the bottom. So initially, I caught a trade there. I think I caught one that got maybe stopped out, but then I re-entered. And then I trailed my stop loss above this high once I saw all these gaps being created. Okay, so what's this level here? This is like an order block on the, is it the daily? It's a wick on the daily basically, and price doesn't actually close above it. But again, we have this breaker here. Let's call it a breaker. You can call it order block, but because of this one candle, it's a breaker. And we just drop down. Okay, so on to the 1 hour or 15 minutes. You can see how deep you're going by just going into the minutes chart, right? There's so many candles that happen. And it's a pretty big move so far. I mean, it's almost, you get like 85 pips instead of trying to scalp like 5, 6, 10 pips. So, yeah, profit should be taken at lows, these gaps and order blocks. I think that, okay, we're creating these equal highs. I think that we're going to possibly either come into here and just come down and take it out, or we might just do one more up to this trend line area or something, or a little bit higher, maybe taking out a session high and then moving lower again. So next week, maybe buy side liquidity is taken out a bit, or we just respect this breaker and then we continue moving down. But you can see the equal highs here. That'll probably be kept and then taken out during a session like a London or New York. Yeah, so pretty straightforward, I think. So you see the gap is here on the daily, 12 hour, the daily. Okay, and you get this I guess you call it order block, but price spikes up into here. Spikes up as long as the bodies don't close, so it's following the higher time frame order flow. Yeah, so pretty straightforward. So that's it. I'm targeting this. So we got a monthly here. Where would I target, right? If I'm bullish on the dollar, this monthly gap. So we're distributing here one more time, down, up, down, and then let's come back down to a discount. Okay, this is the most likely area that I would want to target. I think we'll come down here. So until then, I'm sure, it's 300, 400, 500 pips. If we're not even going lower than that. So I'm bearish on the dollar right now until we get to here, at least somewhere around here. So I can look for sells. Okay, got the whole weekly time frame. Look for inversion gaps, inversion gap here. Look at that. I mean, the more confluences you have, the more likelihood trade is going to pan out. Okay, so we had this monthly gap that we can, again, once the next months come, we can use that price coming back into that to potentially come lower. I know I disrespected it here, but sometimes you get a disrespect and then later on you get a respect. So price may come back into it to test it and then come lower. These are relative equal lows in terms of bodies. I use that too sometimes as a draw on price. So somehow it works. It's also kind of a draw on liquidity. You get price coming into this breaker, pop, all the way to the body, not even getting out of the body, this small body, and then expanding lower. So we can wait for next week. Next week, what do we have? We have a gap here. Okay. I'm just going to cancel all this. These things that we don't need. This monthly. I'll keep that monthly on. And this weekly gap here. So I would normally just put a Sibi. This is how I do things. I just like to annotate. Some people have less on the chart, some people have more. But we could come into that. If we do come into that, what am I going to be doing? Looking for a short. Okay. Yeah. Where else would we go? I mean, we came stab, we stab again, took liquidity in a bearish situation, midpoint of this wick. I want to see how it all kind of lines up. You see that? Expand down. You see this wick here comes into this order block here, then expands down. So the more things you have going hand in hand, the more likely you are that your bias and trade is going to pan out. One more time, look at the daily. What is this red thing? Okay, so could have a daily gap too, but we have this daily order block forming, right? This whole area, 3 consecutive up candles. So price trades down, trades into it around the midpoint, and then trades down. Okay, so we could trade into a gap, but likely we'll be expanding lower pretty fast. So in this down moves, a lot of the time London is usually very good. Let's see. Oops. These continuations, like here, London usually has a good move. Like this. Once price is done like distributing and it's ready to like go down, normally you get London being pretty good, New York giving you a retracement, and then yeah, until you hit a higher time frame PD array. So we're here. What we're looking for. Remember, want to target down here, right? Pretty easy target. Just a small area. Now you can do this on any time frame. This could be a 4-hour chart, and you could be going on to the 1 minute to try and target this area. So you see price coming down, following this 4-hour fair value gap, and then price is fractal. It's the same on every time frame, and then go on the 1 minute. Yeah, the 1 minute, you can see price respecting all the blocks, distributing. Look, gaps work here on this time frame as well. Price comes back up to this order block. Well, then the market's closed, and then we can look at all the things like liquidity, buy side liquidity. Look at these equal lows here. Price takes it out, comes out, takes out these equal highs. That's how the market's moving from the 1 minute to the hourly, to the daily, to the weekly, to the monthly. Yeah, it's all happening like that, and it's all based on liquidity, cycles, the algorithm, and the market being efficient, basically. So yeah, I hope we found that insightful in terms of ICT's concepts and having a top-down analysis. And I'll see you next time. Bye-bye.